Good afternoon, social media world. This is Dave Huber, and I am going to be doing the live trading for YouTube today. I guess I think we're also doing this on Facebook, but we're going to look at the market and have a discussion about what's going on in the market and what opportunities may be available to you in the market. So I want you to understand that everything that we talk about should not be taken as investment advice. It's more for educational purposes. If you'd like to get some investment advice, then you're going to want to become a client of Tradeway. And that is our investment advisory firm. Here we go. All right, here's what we're going to do. What I really want to do is just do some stock analysis, right? Let's just take a look at what the market's doing as a whole, maybe look at individual stocks in particular. So here's what I'd like for you guys to do. If you're joining me live, feel free to like, subscribe, hit the notification bell, and do all that other social media stuff. And then also, if you wouldn't mind, in the comments section, go on ahead and let me know if there are any particular stocks that are piquing your interest. And if we have time, maybe we'll go through and just look at some of those as well. But right now, what we're looking at is the S&P 500. So I'm going to pull that up where you guys can see it. You should be able to see the S&P 500 now. And what you'll see as I zoom out on the S&P is that we've been in a pretty healthy downtrend. And I say healthy because what a lot of people don't understand is that a downtrend is actually very good for our market sometimes, right? And this is definitely one of those times. And what do I mean? Well, we've been fighting inflation, right? Inflation is through the roof, and the Federal Reserve is using their primary weapon against inflation, which is they raise interest rates. When they raise interest rates, what happens is that raises the cost of money, because an interest rate is just the cost to borrow money. So what's happening is money is getting more expensive every time they raise interest rates. Well, if money is more expensive, then it can purchase more things. It means it has more purchasing power, which is the exact opposite of inflation. So when we start seeing inflation get out of control, the Federal Reserve raises interest rates to make our money a little bit more valuable. And that way it can begin to purchase some of the items that are currently getting more expensive. You've probably experienced this so far in your life. Gas is higher, groceries are higher, energy is higher. Like, you are experiencing inflation. And so the Federal Reserve is fighting inflation. Now, when they do this, the overall market or the economy really doesn't much care for it, especially stocks that are in the market, right? So publicly traded stocks. Why do they not like it when the Federal Reserve raises interest rates? Well, because now money is harder for them to get access to for all of their business dealings, right? So when the interest rates are risen, once they reach a certain point, typically a point at which financial institutions can move their money out of the stock market and put it into the bond market and make a similar return with less risk. When that happens, then you have a recession, which is what we've been in truly since January, but officially since the end of the second quarter this year. A lot of the news headlines say we might be getting into a recession. Don't listen to that. We are in a recession. We've been in a recession, right? You got inflationitis, Marcelo. I'm so sorry. I think we all do. So we're fighting inflation by increasing interest rates. And that's why you're seeing all the stocks as a whole just kind of come down over the past year, or rather I should say 8 to 9 months, something like that. Well, really, I mean, it's really closer to a year at this point. And so what we're looking at now is we're looking at where is the market currently. It has been moving up over the last 3 weeks, 2 to 3 weeks here, almost a month. I guess a couple of months, really. Man, can you believe it's already December? I cannot believe it's already December. But yeah, since about middle of October, we've got an up move. So will this up move be sustained? A lot of people are wondering. I don't believe it will be. I don't know how long it will go up, but I don't think it will be sustained for very long because we still have problems with inflation. The manufacturing numbers came out a couple of days ago. They were higher than expected. The wage numbers came out. People are making more money than expected. You might not be feeling that because of inflation, but what's happening is because people have more money, they don't feel the inflation as much. So they're not slowing on their spending. And because they're not slowing on their spending, we still have fewer and fewer products out there, which means inflation keeps going up. So the Federal Reserve is beginning to fight back with these interest rates. They're increasing. And that's what the entire market is really watching. How are the interest rates going to affect the market? Well, if we keep raising rates, you can bet that the stock market's going to keep going down. But if we start to taper off the raising of the rates, the market might get pretty happy about that and start moving up. So all eyes are on the Fed. Federal Reserve, last time they raised interest rates by 0.50 or by 50 basis points, as we say, they said we may be able to start tapering off. We might be able to slow down the increase of rates. But then we had the jobs numbers and we had the wage numbers come out. Now, in today's news, we had some other numbers come out that were actually somewhat good news. And you're going to think I'm crazy for saying this, but it was that the jobless claims were higher than expected. So more people were out of work than the analysts expected for the month. Now, think about what that means. That means that companies are starting to lay off their employees because they've got to keep their heads above water with the increased costs due to inflation. So people are starting to lose their jobs, and that typically is a sign that the economy is slowing down, which means if the economy is slowing down, inflation should start slowing down as well. However, that's not yet been the case. So far, we're in an almost stagflationary period, which means the economy is getting stagnant, it's slowing down, but inflation is still going up, which means we may need to increase interest rates higher still, which means we might be seeing this market go down more from here. Now, what we were looking at was this downtrending S&P. That's what we're looking at right now. This is the S&P. And if you'll notice, we had an uptrending support line on what's called the retracement. A retracement is where the S&P goes from support. That's this bottom line that you're looking at over the long term. See this bottom line? When the S&P retraces coming off of the bottom line, going up to the top line, when it moves up, it's retracing its steps. See, it was going from up to down. Now it's going from down to up. That's why we call it a retracement. And so that's what it's doing, is it's retracing up to resistance. And notice every time it has hit resistance, it has crashed, but it does do this little tick up every now and then when that happens. So that's what we're seeing right now. We're seeing that it's starting to crash off that resistance line, which means it may be a great time to do some put option plays if you know how to do put options. Marcelo says, I think I heard David Mitchell back in 2014 say the market is ahead of the news, sort of like forward looking. Yeah, Marcelo. So essentially, that's what you'll see when the Fed begins to say, all right, we're going to slow down interest rate hikes. The market will begin looking a little forward at the good news and try to anticipate that now's the time to get in. But with bad news, sometimes the market's a little more rear facing with bad news. They tend to ignore it at first and then it catches up to them. So yeah, you're right though. That's something that David has always talked about. And for those of you who don't know who David is, he is our chief executive officer and founder of Tradeway. He also happens to be my father-in-law. So here's what we're going to look at now. If anybody has some stocks that you'd like to look at in particular, we've got about 5 minutes left. I'd love to just look at in particular stocks, kind of give you an idea of what the stocks are doing, not just the market as a whole. So the market has broken this uptrending retracement line, which means it could go down from here. You know, it's pretty bearish we got a little bit of good news today, but it doesn't seem as though it's going to really sustain a good move up off of that good news unless we get more good news tomorrow. So we're waiting to see what happens. We are up against a very strong horizontal price point, which means it could hesitate before going down. Now you got to bear with me. My voice is a little shaky today. I've been fighting off a cold. I've got my water in hand, so that's going to help. Any in particular stocks you guys would look at, please feel free to throw them into the comments section. I'm going to pull up one in particular, Disney. Disney is looking not unlike the market. It's been going down as well. And it's just got this very strong downtrend. It too is up against a horizontal price point. See how it was just moving down pretty consistently. And now it has something that it's getting stuck on. That thing that it's getting stuck on is a horizontal price point, which causes it to sometimes just kind of move sideways. So now we're in what's called a descending wedge pattern on Disney. Disney is squeezing into this descending wedge. See, the tops are getting lower, the bottoms are staying the same. And this descending wedge pattern is causing Disney to just kind of almost squeeze into nothingness. It will eventually break out, either going up or going down. We don't know which, but I promise you it will probably follow the market. So whichever way the market goes, Disney will likely follow. If the market decides to head down and Disney breaks this horizontal line, it could be an opportunity for down plays. I'm not going to tell you exactly how to do that because you're going to need to come and become a Tradeway student to do that. Get with some of our coaches who are all registered investment advisory representatives. They can walk you through your first trades if you'd like. And we do this sort of thing on a regular basis. So if you're brand new to us and you're like, what is this I'm watching? Well, you're watching Tradeway, a faith-based investment advisory firm. We teach stock trading through a biblical worldview. And what we do is we teach you how to take control of your investments. So the things that a financial advisor typically would do for you, we teach you how to do what he does. So you can cut out the middleman, take control of your investments. And if you don't like the job that they're doing, you can take matters into your own hands. Now, sometimes I'll be the one sharing some of the market knowledge with you like I am today. If I hadn't gotten sick last minute, I probably would have had somebody else cover for me. But since it was kind of last minute, I didn't want to spring this on anyone else. So sometimes it'll be me. Sometimes it'll be Jeffrey Nance, longtime friend and a youth minister by trade, who's also a veteran stock trader who can help teach you the ins and outs of stock trading. And we're going to show you how to do this in a way that is God honoring, which is really cool because a lot of people think, oh, the stock market, that's not God honoring. Believe it or not, it can be. And there are certain ways that you've got to approach it so that you're approaching it like a business. And there are other ways you could approach the stock market where you're just gambling. We want to take the gamble out of stock trading. We want to show you how to approach it like a business. So we're going to teach you things like market analysis, like what we're doing today, where we looked at the S&P. We're going to teach you how to find certain buy and sell points on individual stocks, like I showed you here on Disney. If this breaks out of this horizontal line here, it could go down, which would present an opportunity for a put option strategy. We teach everything from stocks to options, to advanced option strategies like credit spreads, debit spreads, iron condors, butterflies. If you want to get really deep into the market and you want to know some really cool strategies, some of which are safer than others, if you want to take higher risk strategies to shoot for higher returns, we can teach you how to do that. If you want to look at lower risk strategies to safely approach the market, maybe with your retirement accounts, we can teach you things like covered calls and lower risk strategies that are designed to create income. That is what we're hoping that you guys will get interested in. And that's why we do these lives for you guys, so you can get a little taste of what we're doing at Tradeway. And the coolest part about it is we're going to do it all through a biblical worldview. We're going to use the scripture to basically train our minds so that we don't approach the market too emotionally. We approach it logically, and we approach it with a certain kind of identity that the Lord has given us. So I hope that you guys have enjoyed this. That's my 15 minutes. My 15 minutes are up. I didn't see any tickers get shared in the comments, but that's okay. We'll see you again next time when we do live trading on YouTube and looks like Facebook as well. If you have any other questions, please feel free to call us at support@tradeway.com. I'm sorry, that's email at support@tradeway.com, or you can call us at 877-907-TRADE. That's 877-907-TRADE, or check out our website at tradeway.com. Hope to see you guys again at the next live trading, and then we'll see you in the market. Y'all take care.